Good day, my viewers. I welcome you to AA Accounting Tutorial, where accounting topics are being treated. In today's video, we shall be discussing on how to prepare double column cash book. Besides, if you want more details on cash book, I will drop the link of a particular video in which you can watch and get more knowledge on cash book as a whole. Therefore, we shall move into solving the question. Before then, don't forget that for the double column cash book, we're having both credit and the debit side. This is the debit side, while this is the credit side. The debit side has to do with any money that comes in, either through by cash or by check. You are going to put such transaction on the debit side, while any money that goes out is either by cash or check. Such transaction will be recorded on the credit side. Aside from that, there is a particular concept I want you to understand when you are referring to double column cash book. There is a particular concept we call contra entry. What do you mean by contra entry? Contra entry has to do with when money is being taken or probably is being withdrawn from the bank to the office for the office use, or probably money is being taken away from the office to the bank. Such transaction is called contra entry. But for further better understanding, I want to make a video, a separate video that has to do with the posting of the contra entry on double column cash book. For today's topic, I want it to be on double column cash book, basically without contra entry, so that you understand better of it. Now, the question on these very particular topics, double column cash book, goes thus. Write up the two column cash book of Phillips Netson from the following for May ended 2023. May 1st, started business with capital in bank 15,000 naira. May 2nd, paid insurance by check 3,000 naira. May 3rd, received check from Adeola 1,000 naira. May 5, Smith lent us 30,000 naira by cash. May 6, cash sales 31,000 naira. May 10, paid salaries in cash 1,000 naira. May 11th, paid motor expenses by check 16,000 naira. May 15, bought stamp and postages by cash 3,000 naira. May 17, purchased motor fan for cash 20,000 naira. May 20th, cash purchases 1,300 naira. May 25th, introduced 5,000 naira cash as capital. May 30th, received commission by check 4,000 naira. Now we are going to prepare the double column cash book. First of all, as you can see, the other time I explained what we mean by W raised to power 3, I mentioned who. The first W stands for who, while the second W and that of the third W. In this case, you are preparing account. Consider that you are the owner of the account. In this case, you are a student or an accountant. Have it in mind that the owner of the account you are preparing, you are the one owning the business, or probably you're the one bearing such name. Therefore, we have Phillips Netson. Phillips Netson. Then we are preparing for double column cash book. It's either you call it double or two. Double column cash book. Then for the month ended May 31st, 2023. Now we are going to prepare our accounts by, let's do it this way. Then divide this into 2. Then here we make this as date. Then this will be for particulars. Then this will be for ledger folio. Then we have cash, then bank. These are the columns. Then do it this way. As we all know, this side is the credit side. Why? Then on this side we have bank, then followed by, this is cash. We have ledger folio. Then we have particulars. Then we have date. Then this side is called debit side. Now, then the currency we are using for this question is Naira. Therefore, I will need to put the symbol here, the currency sign. I will put it here. It depends on the currency you are working on. Then, what we are having there as the first posting, May 1st, started business with capital in bank, 15,000 naira. Then come here, May 1st, capital. Then, meaning that Philip Nelson, when he wanted to probably begin this very particular business, the transaction for the month May, is having 15,000 naira in his bank to begin the business for that very particular month. That is the reason we are having this on the bank column. Now, May 2nd, paid insurance by check, 3,000 naira. Now, you come here, May 2nd, you write insurance, okay? The insurance by check. Anything that has to do with check has to do with bank. Then you put 3,000 naira here. Meaning that during May 2nd, Philip Nelson paid for insurance that worth 3,000 naira. That is the reason we are having this as payments on the bank column. It is paid through check. Now, May 3rd, received check from Adeola, 1,000 naira. Meaning that May 3rd, we come here, May 3rd, you write Adeola. Philip Nelson received 1,000 naira through check from Adeola. You come to this side, then on the bank column you put 1,000 naira, because therefore you record it on the bank column, just because the money was paid to Philip Nelson through check. Then May 5, Smith lent us 30,000 naira cash. This simply means loan. Therefore, we are going to write it here, May 5. May 5. You put loan. Okay? Then you come here under cash. Put 30,000 naira here. Then May 6. Cash says 31,000 naira. May 6. Says, just put says here. It is 31,000 naira. We are going to put it on the cash column, all because what this is trying to tell us is that during the month of May, Philip Nelson made some sales that worth 31,000 naira. As a result of it, when he collected the money, this serves as receipt for him. It is something that, that comes in, as in the cash inflow into his business. We have to put it on the debit side. Then, May 10, pay salary in cash, 1,000 naira. May 10, Philip Nelson paid salaries via cash. So we are going to put it here under cash, 1,000 naira. Then May 11, paid motor expenses by check. This simply means during the month of May, Philip Nelson paid for motor expenses by check 16,000 naira. We are going to have it on the bank column, 16,000 naira. Then you put motor expenses. Now, that is May 11. Then, May 15, bought stamp and postages by cash, 3,000 naira. May 15, stamp and postages. It is said to be 3,000 naira by cash. We are going to put it here. This is part. For May 17, purchase motor farm for cash, 20,000 naira. You come here, May 17, motor van, which is 20,000 naira. This simply means that during the month of May, Philip Nelson bought a motor van for 20,000 naira by cash. Therefore, that is the reason we are having it on the cash as part of his payment. We are having it under the cash column and not that of the bank. Then we have May 20th, cash purchases 1,300 naira. Then you come here, May 20th, we have purchases under cash as well. Then you put 1,300 naira here. Then for May 25th, introduce 5,000 naira cash as capital. This indicates that during the month of May, Philip Nelson introduced another 5,000 naira as his capital for the business. But don't forget, this time around, it is through cash and not check. Then you come here, May 25th, you write additional capital. Then you put 5,000 naira here. Then the May 30th, receive commission by check, 14,000 naira. May 30th, okay. Commission, you just say, write commission here. Then it takes 14,000 naira by check, 14,000 naira. The next thing is to balance of the accounts. Therefore, we are going to do it separately. First of all, on the debit side, calculate what you're having on the cash column. Then you come to the credit side, then you calculate the cash column. The figure we're having there as well. As a result of it, you can now deduct the smaller one from the bigger one in order to get your balance. Therefore, I will quickly do this. Then for this, 30,000 plus 31 will give us 61. Plus this, that should be 66,000. Okay, we have it for 66,000 naira. Then for this very particular one, we are going to write 66,000 naira as well. You write it there. Then you now come here, 1,000 plus 3, that should be 4,000. Plus this, 24,000. Plus this, 25,300. Then take away 25,300 naira. Take it away from 66,000. Then you cannot come here, write May 31st, balance carry down. Then we have it for 40,700. By the time you had 40,700 plus all these figures, you are going to have 66,000 naira. Then the next thing will come to the bank column. We are done with the cash column. Now for the bank column, 15 plus 1, that should be 16,000 plus 14,000, that should be 30,000 naira. Then you come here as well, put 30,000 naira here. Then 3 plus 16, that should be 19,000 naira. Then take away 19,000 naira from 30,000 naira, we are going to get 11,000 naira. Would be our balance carry down. The balance carry down, that is the balance Phillips Netson is still having in his pocket, in his business, in the office, that is 40,700. While the balance, the money he's still having in his bank account is 11,000 naira. Now, that is what he's having at the end of May 31st. Then we now come here, balance brought down. Then you write the next month after May is June. Then by June 1st, this balance brought down 40,700, then 11,000 naira. This will serve as the balance brought forward, that is opening balance for the next month, which is June. This is how to prepare simple double column cash book. Subsequently, in my next video, I will prepare the part 2 of the double column cash book, where I will treat the contra entry for better understanding. If you have found this video very useful, please kindly subscribe to my channel, give it a thumbs up, share the video with your family and friends. Thanks for watching. Bye for now.